This is a pre-market analysis of 29th of July. So yesterday was Nifty monthly expiry, and we have seen it was completely range bound as expected. Now today we are going to get a bigger gap up. It's almost 170 point gap up. There are a lot of positives that I will be discussing, and most importantly, we have seen yesterday FIIs were net buyers. Okay, so FIIs were buyers, DIIs were buyers, and still the market was in a very tight range, and that itself is telling the power of retailers, retail option sellers especially, because almost 10 crore OI was there in that just 100-point range. Anyway, so we will look at the positive aspects today, and why you are going to get a gap up, and whether you need to chase the gap up or not is another question. If you get a confirmed breakout and above 24,200, if it is sustaining, there may be some quick scalping opportunity, but you cannot ride the momentum because you are already getting a big gap up, and big gap up may get sold into, or similarly big gap downs you can see buying also. So you cannot completely blindly chase it. Any dip you can consider as a buying opportunity because a lot of positives are there. Okay. So, but if you look at US markets, semiconductors, stock weakness, and this AI issues and all is there. That is why US market is looking weak. Otherwise, the geopolitical tension is somewhat reduced. Oil price have came below 80. All these are very positive, and that is why we are going to get a positive opening. So the major things that I want to discuss is there is a fresh regional proposal, not between US and Iran, between Oman, Iran, right? That is regarding the Strait of Hormuz, how the controlling and everything should go on. And then further, there is a fall in crude oil price. So we have seen from 97, 5% crash on the last day, and then further 5%, and then 3%, and almost now it came below, WTI came below 80. So now if you look at GIFT Nifty, it's trading around 24,230. So 24,230 means what we need to consider. Yesterday Nifty closed below 24,000. So 230, no, because 1 month futures premium also you need to consider, that maybe around 60, 70. So if you adjust that, it will be around 170 point gap up is what I'm looking for. And if you look at the ADRs are also positive, and Indian industrial production data is also very good. And one negative is this Fed decision is coming, and because of that, US market is cautious. Now let's talk about this Oman, Iran, the Strait of Hormuz proposal. Oman, Iran, and Middle Eastern countries, they have had a discussion regarding a possible agreement on the Strait of Hormuz. That is excluding US, because they have realized that US is now dragging the process only, right? So the Oman's proposal is that like this: the Strait of Hormuz shipping route will be managed through a regional agreement, and the vessels using the strait would be voluntarily paying a transit fees for that, right? And Iran would not exercise any sole control over the strait. And if you look at it, the aim is to restore the normal commercial shipping through the mutually acceptable mechanism, so that this is a win-win situation for all these countries. So if you look at Iran, Iran rejected Oman's proposal, but there is a counter proposal from Iran. That's what making the things positive now. So at least Iran is now going for a proposal with Middle Eastern countries. That's what I mean by that is what looking positive. So Iran's temporary agreement is like this. What they're saying is vessels traveling on the Iranian side would be managed exclusively solely by Iran. Strait of Hormuz have two sides, right? One pass through Oman, one pass through Iran. So Iran side completely by Iran, and the traffic on Oman side would be jointly managed by Iran and Oman. Iran and Oman. So this is a proposal. So Iran, of course, continue to demand that complete control. In fact, if you look at it, substantial control, I would say 90% over the strait. And so far, there is no final agreement I've reached. But you see, Oman's response is very important for the next development. And if that happens, then there is a possibility that there will be a peace in the Strait of Hormuz, at least between, there is a regional agreement going to come between the Middle Eastern countries. Now coming to US-Iran talks, US president is saying that US had held good talks with Iran. There was a possibility of reaching an agreement. We have seen this from last 3-4 months or so. And Iran denied it completely. And Iran said that it is not seeking to restart any direct negotiation with the US. So see, there is no confirmed kind of direct agreement or talk between these two countries at this point of time. Most importantly, if you look at it, the crude oil price have fallen. Brent is around 83 only. WTI is around 79, below 80. This is very positive. Okay, now again on the other side, Red Sea, the Strait of this Bab el Mandeb, there is some escalation. Houthis have attacked Saudi Arabian oil tanker using ballistic missile, and in fact, there was a attack on Jizan oil refinery last day. So because of this, Saudi Aramco actually shut down one of the facility, and if you look at the capacity of that, it's around 4 lakh barrels per day. So that is there, but this crude oil market is not much affected because of that, because there is some positive development happening over this side. Now, if you look at GIFT Nifty, as I've told you, indicating a flat, if you see to 24 230, and if you adjust it with the premium, we are going to get 170 point gap up. But can you chase it? It's difficult. There can be sell off. So 24 200 is going to be a resistance. If that crossed and sustain above that, then any retracement to EMAs, close to EMAs, you can buy. The market is like buy on dip, but when you see such kind of gap up and further, if you get a rally, there can be a potential to sell also, right? 24 200, 24 300s are very important levels. If you look at ADR is very positive. Both banking ADRs, HDFC and ICICI, both are positive. And if you compare it with yesterday's Indian market, now there is an arbitrage difference positive 2.3, which means two markets traded at a difference of 2.3. It have to come together. That means either the ADR should come down or we should match, we should go up. So imagine if HDFC and ICICI both going up almost 2%, that will single-handedly take Nifty to 24 300, 350 level also. Okay, that is another positive. Infosys ADR again 5% up. Indian market move yesterday, we have seen almost 2.5%. So again, there is a fresh arbitrage of almost 7%. So that's big. Wipro ADR is also, there is a difference of 1.5. So Wipro is positive, Infosys is positive. If you look at IT side, ICICI and HDFC is positive. So ADR is looking very positive. And industrial production data is positive. I'm not discussing that. That's of not much use. US market, if you see, there was a weakness. That is mainly because of this AI stocks and semiconductor stocks. But there were strong earnings from this Coca-Cola, Boeing, that actually supported Dow Jones. And Dow Jones increased around 1%, S&P almost 0.2%, Nasdaq 0.2%. VIX declined and it's now below 18. So Fed Reserve, the decision is scheduled tonight. So probability of no change is around 70%. So most probably there won't be any change. Probability of 25% rate hike is around 30% also. So the market is cautious because of that, right? This policy decision, and that's why US market is not doing well yesterday. So if you look at the overall summary, what I'm saying is there are a lot of positives. Crude oil is below 80, that is positive. We are getting a gap up, that is positive. FIAs were buyers yesterday, that is positive. ADRs, banking and Infosys showing positive. Strong industrial production, right? All these are positive. But there is no final Strait of Hormuz agreement. This discussion between Middle Eastern countries is also very positive. So there are many positives, right? US market was slightly down. That is a negative. FIIs bought 750 crore yesterday. DIAs 1,650 crore. Both were buyers. And yesterday it was monthly expiry. So good amount of open interest and unwinding is there. So if you look at it, index futures around 21.5% open interest is unbound. Call open interest 52% unwinding. Put open interest almost equal, 52% unwinding. That's why market was in a very tight and narrow range. So it's almost, PCR is almost the same, because if you see put and call is the same. So there is no change in the PCR. Clients, as usual, it is bullish positioning. FIIs is bearish positioning. Prop traders are neutral. So these are the main things that I want you to discuss. See, what's the important level? 24 200. If they cross that and close above that, you get a convincing candle, then any retracement to that levels could be a buying opportunity. Opening at around 24 170 level, any dip to 100 is a buying opportunity. Buy on dip rather than blindly chasing this. This market is not to capture the momentum. This market is when you get, close to EMAs, you can try. You can look for some scalping trades. Otherwise, it will be good for selling. So that's about the session, guys. Thank you so much. If you would like to trade with us during the live market, you can join in our live market mentoring program, where I trade live and I explain that. With that, we teach, right? So you can talk to my team. You can join the session. See you there.